For panel number 3, Security, Trust, and Battle for Consumer Confidence, we'll welcome Pierre Woozevelt, who's Vice President of Aon, who will be our moderator. Dorothy, Giobbe, thank you. Counsel at Alston & Bird, and Adam Zarazinski, founder and CEO of Inca Digital.
I will just do a quick background introduction. My name is Pierre Woozevelt. I am a vice president at Aon. I am part of our life science and technology practice. Been in the insurance industry for 10 plus years. Prior to that, I was in a global technology role building out infrastructure primarily in the European and Latin America markets. Fun fact, I'm fluent in 4 different languages. Pierre, that is my native tongue. Speaking French. I speak French, Spanish, English, and Portuguese. Excited to be here today, and I will pass it to my next panel member.
Hi, everybody. I'm Dorothy Giobbe. I'm counsel at Alston & Bird, and I work with clients in the fintech and emerging technology spaces. Before private practice, I was in-house at a large financial institution for 10 plus years supporting emerging tech initiatives across the bank. Thank you, and great to see everybody.
Hi, my name is Adam. I'm the CEO of a company called Inca Digital. We do risk intelligence in crypto and fintech. So kind of think of us like Palantir for crypto. But then we also do a lot of recovery efforts too. So a large part of our business now is if you had crypto that was stolen or hacked or you were defrauded, we're fully vertically integrated where we not just do the intelligence work, but then also file lawsuits to go and get that money back, both for companies and starting soon for individuals. Background is in military intelligence. Nice to meet everybody.
Thank you. So today's questions we have are actually from the audience, so very targeted. I'll go off the first question. How can AI strengthen compliance and fraud detection without creating new attack surfaces?
It's not a cure-all, obviously. Part of the issue, I'll kind of tell you where we're at Inca, at the very least, where it helps and where it hurts. So at any large financial institution today, AI is important, right? But there's basic shit that they need to get right first. And if you've worked in a financial institution, you know what I'm talking about, right? Like, we're still using Excel spreadsheets for the most part to do our analysis. So data, wider ranging data integrations need to happen first in order to be able to even use AI in a way that is sustainable and actually has an impact on risk at those companies. Where we are, we're a fairly small cutting-edge tech company. We are able to use AI to analyze particular data sets. So we can analyze trading data with AI. We can analyze social media data with AI. We can analyze blockchain data with custom-built AI models, typically on top of Llama models. The issue that the next step in this is combining heterogeneous data sources together, just shoving a bunch of stuff at the model, and then the model figuring it out. And there's some programs to do that. So if you guys know, DARPA, they haven't made any decisions yet, but they've publicly said they're coming out with this program called A3ML, which is essentially exactly that, taking social media data, blockchain data, fintech data, TradFi data, and shoving it all into one singular model, and then it comes out the other side. What risks are there? You can ask it questions, everything like that. So we're getting there, but it's not a panacea, at least not yet.
Yeah. So I guess I would add that it's true, obviously, that using AI or machine learning can be additive or improve compliance programs, and particularly in some areas, it's a regulatory expectation that it be used, depending upon the product or service, how it's being offered, and where it's being offered, or whether it's being used for internal purposes. So a lot depends on use case. Use case drives the risk, always. I guess I would say that the most important thing that I've seen, and I think what I talk with clients a lot about, is governance of AI. So it's great to use AI tools, and there's a lot there, available on the market. And whether it's homegrown or through a vendor, governance of that AI system or that AI tool is something that we've been very focused on. We think a lot about, and that includes the models themselves, model governance, but data management, all of the things that are feeding the AI tool or that the AI tool touches have to be part of a larger governance system. And so I think, having that in place, having that kind of governance in place allows you to use the tool to reduce compliance risk and not creating new risks through use of the tool itself.
I'll chime in as well too. So from an insurance perspective, we typically recommend if you're going to deploy or leverage AI tools, always look at your insurance policies. The most relevant exposure or exclusion we're starting to see on policies are AI hallucination. So always look. There are certain carriers now that are coming out from the Lloyd's of London that will provide you with coverage related to AI hallucinations. I will jump to the second question. What minimum security posture do investors expect before funding fintechs?
Sorry, say the question one more time. Minimum security posture for when VCs are looking at fintechs?
What minimum security posture do investors expect before funding fintechs?
Yeah, they don't care. That's the answer. It's an afterthought. And in some ways, it kind of should be, right? I mean, it just depends on, it kind of depends on what you're doing, obviously, and, where you are. I'm not talking about, OpenAI, right? But, if you're, when Inca got started, we started in 2020, they take a glance at it, right? But if any of you are, starting your own companies, you have to weigh and balance, right, your business operations with how much you're going to get into compliance, how much you're going to get into security, and all of those things, right? It's important. You don't want to kill your own company, right, or get hacked, which happens all the time in crypto, as you know. But also, don't overdo it either, because VCs don't really care. If you've got a good business model, if you're making money, that's what matters more, honestly.
I would just add that I think it depends upon where you are in the cycle, and eventually having appropriate policies, procedures, governance in place will become important if you want to take things to the next level.
Oh, you're just saying that because you're a lawyer.
Well, but it's right. So
you're not wrong. Yeah.
So I think yes, obviously important to get to market and scale products and services, but don't leave those very, very important considerations around policy, procedures, compliance until you're at a point where you're having to sort of retrofit all of that. Take it into consideration. Obviously, the focus on growth and legal and compliance should be supporting and supportive of that growth. But really to sort of to really be successful, those things are going to become very important.
Yeah, I mean, it's true, especially for later rounds. So if you guys are looking for a seed round, matters less. If you're looking for a B or C round, matters more. That's absolutely the case. Yeah.
Yeah, I just want to chime in as well too from a D&O perspective. What I've seen with VCs and private equity, I kind of do agree with you. I'm starting to see a lot of outrageous AI valuations on companies. We're seeing a lot of shift between, let's say, life science companies just shifting and leveraging AI, and their valuations are 2x, 3x multipliers because they're leveraging AI. From an insurance and risk perspective, I would say for any founders or VCs, just be conscious of your statements on what your AI product or tool does. We are starting to see exclusion on D&O policies with regards to AI AI washing. AI washing is basically when you exaggerate what your AI tool or product can actually do. So there have been some class action lawsuits related to that. But yes, I do see that VCs are just throwing money at anything that says AI. It's kind of giving me a similar vibe of the crypto boom. When anything crypto digital asset, they were just throwing money at that as well too.
Yeah, just to add on the AI washing point. So the landscape of litigation related to AI is interesting, and but AI washing, that is the sort of the promotion or the saying that you're doing things with AI or you're an AI company, and really that's not the case. Several cases have been brought by the SEC. There are other regulators looking at it very closely. And so it is an area of heightened sensitivity. So, the statement should match the actual function, products and services. I just wanted to emphasize that because it has been an area in terms of AI washing that the regulators have cited.
And I will say just the biggest example there was, I can't recall the name, but there was a company that sold an ordering machine learning system through, let's just say like your Dunkin' Donuts or your McDonald's. If you ever pull up to the drive-thru, it says, "Can I take your order?" and it never works. You have to kind of repeat yourself several times before a live human actually takes your order. I think there was a lawsuit roughly around $80 to $100 million for that product being sold because it never delivered. It was supposed to create efficiency through the drive-through systems, and it was supposed to eliminate some of the workforce, but that product itself isn't able to interpret the actual order that you're submitting through the drive-through. So
That's just because it's modeled off of the people that were there before that also can't understand what you're ordering.
All right, so we'll jump to the third question. How can smaller fintechs achieve enterprise-grade security affordably?
So, thinking about it from sort of a legal perspective, there is a lot about, fintech, larger institution partnerships. So to the extent that, those partnerships exist, leveraging some of the security apparatus or mechanisms of a partner, for example, is one way for a smaller fintech to think about scaling up on the security front.
I'll chime in because I work with a lot of small fintech, Series A, Series B. What I will say is, from a insurance perspective, your cyber policy does have it. There is about 5 to 10% of allocation towards that premium that will allow you to invest into pen testing and certain tools that can help with your cybersecurity posture itself. So, as a small fintech company, everyone thinks that insurance is more of a reaction tool. Where you can actually use and leverage it as a proactive tool. So your cyber policy, anything that I would say is you're paying that premium anyway, if it's $25,000 annually or $100,000 annually, again, there's about 5 to 10% of that premium that's allocated for you to go out and actually do pen testing or any ISO certifications, anything to make sure that you have a robust risk management program. So use your insurance policy to its full capacity, not just only at a renewal stage.
Wait, sorry. So you can use your insurance policy to cover the cost of pen testing?
Many of the carriers, they do. That's a little sneak secret, so I'm sharing it aloud. A lot of brokers aren't aware of that, but yes, that language is in there, and you can negotiate. You can negotiate at your renewal. I would say if you do negotiate at your renewal, find out what that renewal indication is going to be, that initial pricing, and then say, hey, I want you guys to also cover my pen testing. If it's $15,000, $20,000 for the year, you can negotiate that and add that onto there. But yes, there's typically about 5 to 10% of your premium is allocated to enhance your cybersecurity controls.
Every time I do a conference talk, I always think, like, I'm missing 2 sales meetings to do this, and I'm losing money, right? This one, you just made me money. I would say that, like, from the tech perspective, you can outsource it for the most part. So, like, if you're building a stack, microservices architecture, you shouldn't be like reinventing the wheel, right? For the most part, and it depends on like what code bases you guys are using, but for the most part, you can outsource to good companies that know what they're doing your security infrastructure. You're in AWS, you're using Cloudflare, you're working in Java, whatever it is, everything is there. So you don't need to do anything from scratch. Just depends obviously on what you're doing and what your stack is. But if you go microservices, most of it's taken care of.
All right, I will go on to the next question. This is a fun one for me. How should companies communicate breaches or risk transparently without losing customer confidence?
So I have to say, so from a purely legal regulatory perspective, there are rules around breach and what has to be communicated to regulators and when. So as a starting point, in the event of breach, or thinking about scenarios for a breach, know what the disclosure requirements are. Very, very important. That's a different question from the sort of customer trust issue, and I think that and there are there's some there are, when you report to a regulator, there are certain things that you can say and you can't say, and what you can disclose and what you can't disclose. So that drives a lot, I think, of how you are able to communicate with your customers. And the reality is, in a breach scenario, you may not know enough to communicate, because what you don't want to do is go out to customers and say something, or factual statements, and then have to either retract or explain things in chunks to. So you want to make sure that you have a command of what's happened before you go out to talk to the customers. I think regulators understand that the situations sometimes are fluid, but you're as a general matter in communication with them sort of constantly. Customers are a different story. I think there it's really you have to communicate, sort of not what you say, but how you say it. It's a delicate balance, I think, to maintain that trust. And with the facts may not be complete as you have them.
Yes, so from a insurance and risk perspective, it's an interesting landscape, especially with regards to publicly traded companies that have a duty to announce that there is a breach across their network, which can impact their stock or their market cap. So anytime communicating through a PR, I typically would advise on having that part of your incident response plans. So that should be discussions early on and preparation early on, and your responses should be swift. You should never let your customers or the public kind of generate their own thought process behind it. So it's something that you should address in a timely manner, effectively, and then just working with your team to make sure that the message is not only demonstrating that you are handling the risk post breach, but that you are also communicating and just being transparent as possible.
Yeah, I agree with that actually. Most companies don't have a response plan, and if you're dealing with retail, whether that's financial retail or something else, you need to have one, and then you just control the narrative afterwards. And if you do that well, people are going to maybe lose confidence in your product, but they'll also give you kudos for handling it. So a really good example is the Bybit hack, if you guys saw that. So Bybit it's a big offshore exchange, largest hack in history. $1.6 billion was stolen by the North Koreans. Bybit, I mean, they didn't have their shit together at all pre-hack, but they did a good job post-hack with communication and handling it, right? So they covered down on customer funds, gave live updates throughout the entire process as to where they were, and they largely handled it and survived. Despite it being a massive blow to the industry. So You can come back from it if you just communicate openly and obviously with whatever regulatory or law enforcement communications that are required. But other than that, yeah.
With regards to digital assets, anything crypto related, I've noticed a lot of companies, like similar to Coinbase and Ripple, they will disclose how much limits are being carried, which I think builds consumer confidence whenever they disclose that, hey, we do have a crime policy in place, so if something were to happen, we're able to reimburse you quickly or use our insurance. The issue, I won't say the issue, but my concern with that always is you're advertising to threat actors or bad actors like, hey, we have insurance, we have $50 million limits, or we have $100 million limits, and I think that kind of accelerates anyone trying to exploit them. But I do think that, yeah, it's a double-edged sword, but I do think that it's necessary to disclose that to consumers to help, again, instill confidence that if something were to happen, there is some type of reimbursement mechanism or some type of insurance to back them from a dollar perspective.
Shameless plug, they call us.
Great. Pierre, Dorothy, Adam, thank you so much. This was a fantastic panel. So everybody, a round of applause. And we will, Pierre, do you want one closing remark?
Just want to thank everyone for coming out today. Make some noise for our panelists today. Excellent job. We'll be around to answer any questions. And thank you. Thank you, guys.
Amazing. Thanks so much.